Welcome back to Trading with CJ. Now, aside from buying stocks or ETFs, another great investment that you could make is in real estate or property. Now, there are two main ways really of getting into property. One is through physically buying property, so buying houses or renting them out, etc. But that is very expensive and also takes a lot of time. But the second really popular way of getting into real estate or property is by buying REITs. Now, REITs are a lot cheaper and take far less time to actually buy. So that's what we're going to be talking about in this video. What are REITs? Now, as usual in my Investing for Beginners series, I'm going to try to keep this video as simple as possible. So if you do find this information really useful or helpful, please hit the like and subscribe to my channel. It is greatly appreciated. So let's get into it. So first off, what are REITs? Well, REIT is Real Estate Investment Trust. And what it basically is a company that owns loads of land or property, and it then rents out or leases out that property to other businesses or individual people. They then have to pay a rent on that property, and that's how the REIT receives its income. The REIT then pays out a portion of that to its shareholders. So if you bought into a REIT, you would receive a portion of the income via dividends. Now, if you're not sure what dividends are, I made a very easy video on what are dividends. I'll leave that in the link in the description below. Feel free to check that out as well. Now, another great thing about investing into REITs is generally the dividend yield is quite high. And that's because by law, a REIT must pay out 90% of its profits. So one way of doing that is by having a high dividend yield and paying out higher dividends to its shareholders. Now, of course, you get two benefits with that. One, you're receiving a nice dividend yield for holding this company, and two, you're hoping that this company is obviously going to grow and grow. Therefore, when you do want to sell eventually, you have the cost appreciation, which hopefully you've accumulated. So how do we actually invest into REITs? Well, equity REITs are public limited companies, which means you can invest into them like any other company on the stock market. You can just buy shares into this REIT. So in effect, a REIT is just a different type of stock. So let's take a look here at an example. Now this one I'm going to show you is Segro, EPIC code SGRO. Now this REIT specialises in owning warehouses across the UK. It's one of the biggest REITs in the UK. It has a market cap of over 11 billion. Now if you wanted to own part of this REIT, you could buy one share for less than £10. And now you would own part of this REIT, which means you would own a very small portion of all these different warehouses that this company owns. A very small portion, but nevertheless you would own some and you would still get paid for owning that. Now I wanted to show you this REIT because it's doing very well at the moment. If we look at the graph here, you can see it's been growing and growing. Obviously it had the drop like pretty much every company out there due to the crash, but it's recovered already back to where it was. The reason for that is because, like I said, this owns warehouses. So a lot of companies, such as Amazon and all of these big online companies, clothing like Boohoo, ASOS, etc., they all have to store their stock somewhere. Where do they store it? In warehouses. So that is why these warehouses are in such high demand at the moment, because a lot of companies now are moving online and the online industry is taking off. So there's a huge demand for these warehouses. So this stock is doing great at the moment. Now there are so many different types of REITs you can invest into. I just showed you one that invests into like warehouses, etc. But let's cover a US one here. So let's do SPG, Simon Property Group. Now this is a US REIT which specialises in owning shopping centres, malls, etc. across America. As we know, shops have taken a huge hit lately and they've been closed for the last few months. So therefore this REIT has also suffered. Some of these companies can't afford to pay their rent as well. So if we take a look at this stock, it has just dropped massively and it's at extreme lows at the moment. So we just covered two different REITs, but there are so many different REITs out there. Those ones are in the commercial sector, so offices, hotels, hospitals, warehouses, shopping centres, etc. That's the commercial type of REITs. You can also invest into residential REITs, which is basically the equivalent of owning a buy-to-let property. So rather than you owning a property and letting it out to somebody, you can own a residential REIT, and that's the same thing. They own loads of different properties that they rent out. So a UK residential REIT is one here, RESI, and This REIT is less than £1 at the moment if you wanted to own this, and like I just said, this owns loads of the residential properties. So if you wanted to invest into the residential side, you could also buy into a residential REIT. Now, aside from owning individual companies, you can also invest into an ETF REIT. And what an ETF is, it is a collection of different companies. Now, if you want a bit more detail, I made a video on what are ETFs. I'll leave that in the link in the description below. It's another one in my Investing for Beginners series. So for the purposes of this, we're going to look at IKUP, which is UK property. Now, this is an ETF specializing in real estate. So let's take a look at some of the companies it owns. This owns Segro, which we already looked at, Land Securities, some really big companies in this list. So not only are you owning a REIT which owns loads of different property, you're now owning an ETF which owns loads of different REITs as well. So you can't get much more diversified than this. You now have a hell of a big portfolio of real estate by owning shares into this REIT. So it's a very popular question, right? Why choose REIT over buying to let? Well, let's just talk about a couple of pros for each one. First off, REITs. As I've already discussed, they are so much cheaper. You can own a REIT for about £5 really, as opposed to owning a property for about £20,000 at least, and then obviously a mortgage. Not to mention, a REIT is far more easier to liquidate. If I wanted to sell my shares in a REIT, I could literally do that in the click of a button, whereas to sell a property takes a lot longer. And the last point on this I'm going to mention is there is no physical management. So by me just owning the shares, I don't have to do anything. Occasionally I'll check up on the company, see how it's going, but I don't really have to do anything. Whereas if you physically own a property, you may have to, unless you have someone managing it for you, you may have to do the work if something goes wrong, liaise with the manager of that property, etc. There's a lot more physical involvement by actually owning the property rather than just owning shares in a REIT. However, one of the great things, benefits to owning actual property is you get the leverage, you get the price appreciation. As we know, prices of property generally goes up over time. So if you own a property, not only are you getting the monthly rental income, etc., you're also probably getting more back than what you put in because of the price appreciation. Whereas you won't really see as much of that on owning a REIT. So to summarize here, REITs allow you to own property in the form of shares without physically owning any property at all. You then collect your income in the form of dividends, and of course you can sell your REIT whenever you want. So generally they are a great alternative to owning property if you don't have that sort of money and you want to be a little bit more diversified. Now, I hope you've enjoyed this video. If you found it useful or interesting, please hit the like and subscribe to my channel. I post lots of videos on Investing for Beginners series as well. Check some of those out as well. Thanks for watching, and until next time.